Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, January 21st, 2009. Well, in today's intraday video, folks, I want to discuss some pattern, obviously, that's going on in the market. I want to discuss what the news items are in the market because we are seeing a nice rebound after the ugly losses from yesterday, and those losses were drastic, folks. There's no doubt about that. Yesterday's losses were absolutely enormous when you're talking 4, 5, 6% on the across the board on the indexes. Now, what does that mean going into today? Well, you knew that we came down to some key support lines on yesterday's daily chart, and I covered that in the research center, which all of you should come and join to get really the absolute ideal numbers about support, resistance, turn dates, and so forth. But what I really want to focus on today is the intraday analysis video, and you can see what's going on right now is you're actually having a little bit of a breakout in the markets. Now, what happened, we had a gap up today. Now, there was some good earnings coming out from NTRS, and I want to bring that up, NTRS. This helped the market quite a bit, and this is Northern Trust, a banking player, and what you see here is the gap up, a huge gap up after yesterday on the intraday chart, and that gave a little bit of confidence back to the banking plays and definitely worthwhile for keeping this market afloat. You also had IBM earnings yesterday, and IBM, here's IBM's intraday chart, beautiful gap up and really has traded higher most of the day. You can see that constant kind of trending higher move, although there is a little bit of key resistance up here on the intraday 10-minute chart, on the chart right here where you're currently at, right around $90. $90 a key resistance level on IBM. Now, these two plays right here gave a lot of confidence not only to tech stocks from IBM, but also to the financials from the NTRS, the Northern Trust. Now, going back to the intraday on the SPY, you can see what happened today was an actual gap up in the markets where the Dow gapped up about 100 points, NASDAQ was up about 20, S&P up about 10 or so plus, and what happened was we pushed up initially right into that key time frame. Now, one of the key things I've gone over in these videos countless times on the intraday basis is understanding your time frames. Got to understand your time frames. I can't say it enough to know that when you push up into a 10 o'clock time frame off a gap up, you have to look for either selling out your long positions or taking a short position. And sure enough, look at this. 1, 2, 3. Right there is the high of the market, essentially. The next candle after 10 o'clock, here's 9:30, 9:40, 9:40, 9:50, 9:50 to 10 o'clock. Your next candle, you start to sell, and the selling actually takes you all the way down. Now, how do you know where you're going to go in this market? Where would, if you were short this market, let's say, well, where are the 2 levels on the way down or 3 levels on the way down you're going to look for? Number 1 would be the 20 moving average. All right, not only does the 20 moving average here, which is right here, folks, on this candle work as support, but you also have it, if you draw the line across, notice it's the same area where you were on the first candle. The low of the first gap up candle is right exactly where the 20 moving average is. So that would be your number 1 area where you would start to look for support. Number 2, on the way down, the high of the last candle of the day and right at this level, notice how you kind of came up and you went higher but pulled back right here, would be your second level to look for. All right, that would be level number 2 on the way down. And these are all levels where you have to be aware of to start to look to see if you're going to get a bounce. If you don't get a bounce and you pierce it, then you can obviously hold on for the lower level. The last level you have to look for, and this is the final one where you really would sell all your short positions if you had them, would be the low of the day or the gap fill down here on the markets where we had that hard sell-off candle yesterday and it closed really at the lows of the day yesterday. Look at that. How perfect is that, folks? So you have level 1. This is S1, S2, and S1 and S2 don't really hold in this panic sell-off. And what this is, folks, is you get a gap up, and then everyone is kind of so worried from yesterday's sell-off. You really had a big psychological breakdown yesterday, where people now all of a sudden are on edge of their seats. You know, you had Obama's inauguration. Everyone thought the market would go up. When everyone says it should go up, it probably will go down, and that's exactly what it did yesterday. I can't tell you how many emails, how many people we talked to just on the street, in chat rooms and so forth, who thought, okay, it's probably going to go up, therefore, let's buy the market. When everyone says that, watch out, and that's what happened yesterday. Beautiful move yesterday to the downside, again, going across trend or the opposite of the psychological levels. Now, down here, this is your buying opportunity. If you're going to take one shot, it's got to be at gap fill, because gap fill also coordinates with the lows of the day yesterday. That's a double support line, so this would be the major support right here, and sure enough, what happens? The market gets bought. Now look at first level. All right, if we extend this line even a little more, so first level, you're going to move back. Well, remember, when you break support lines, support 1, support 2, when you're below them, they're going to be resistance on the upside. So just noting that as you move back up, notice how this candle closes right on it. Then you get a doji candle, a flat candle, where you were up a little bit, down a little bit, ultimately closing flat. That's a consolidation candle, and then the next candle breaks higher. Where do you go to? You go right to the 20 moving average. All right, where you hover for a couple candles again. Here's a close on it again, and then ultimately you start to break up. Now, where would the next level on the way back up you'd look for? Well, let's just extend this support line, now resistance, to the next line. Where is that? Sure enough, right there, guys. Look at that. Right there again. Not only is this one a key level for your first hit of the retrace breakdown line right here, but so you obviously know you're going to probably get a pullback off your first hit. But then the next time you move up, notice that the level not only is hit at this point again, which is resistance, more of a minor one based because you've already hit it here. But notice the 50 moving average sloping down. This is an additional resistance level now, and this now makes this another major level of resistance. All right. Remember, first hit of a moving average or a resistance line is always a good pullback play. Then the second time, it's a little weaker, but when you have the 50 moving average as a secondary resistance level, then it becomes even more so on the resistance side. So sure enough, what happens? Another sell-off. Notice how you're kind of staying in a sideways range. Also, what I want to do is draw this line out, and notice how the support lines just keep on bouncing off. I mean, you couldn't have choreographed this any better for an intraday chart analysis video, because just look at this. Once you get into this range, you're just bouncing off support, resistance, back and forth, up and down. Now, ultimately, what happens, let me remove this line up here. Ultimately, what happens, you get a bid in the market here, Obama doing a little speech in the afternoon, and sure enough, what happens, the market starts to get a little bit of a bid up, and we break above the 50. Remember, the second time you hit a 50 or a resistance level, which would be this and this, now it's actually the third time you've hit this line, but just the second on the 50 moving average. You break through, and now you're starting to trade up and above. Now, what do you want to look for? You want to look for these levels above, anywhere in this range as a possibility of a pullback area for the first hit of this key topping area in the markets. Now, what you want to see here ideally, if this market's going to make a move up, you really want to see consolidation. You're starting to see that. Notice how you broke above, you confirmed it by moving above. Now you want to look for that sideways trading pattern, which would create an in spirit of bull flag. All right, in spirit of bull flag develops, you start to look for a breakup later in the day. Now, if you start to move down and you close back below the 50 moving average back in this trend, all bets are off, and you kind of take that in stock and you say, okay, well, now we have to reevaluate. But for now, you are getting a flat candle, a secondary that could be setting up for another move up here. Again, as long as it holds the 50 moving average in this trend line, that play will be intact. You break below, then that's off. Okay, let's quickly go to the 60-minute here, flip over to the 60-minute, and you can see what happened. Obviously, we had that in spirit of M pattern, although it's not a true M pattern because it's happening near the lows of charts, but you see that. Now, the key here, guys, was this big 60-minute candle sell today that gave us a double bottom on the 60-minute. That's a signal right there. You have to be buying that as a trader. There's no doubt about it, and sure enough, that was a great buying opportunity as the markets moved up. Now, on the 60-minute, your resistance line is going to be right up here at the top of this candle. Also, watch this 20 moving down, as that'll work as a support resistance level on the way up as well. So you're coming right into the resistance level here. We can flip back to the 10. You're still consolidating. This would be the same resistance level you're looking at on the 60-minute. It's just a little harder to see, and that's what you want to look for. Volume today, it's decent. I mean, it's 1.8 million right now contracts on the futures. That's not exactly a heavy volume day by any stretch, but it's okay. You know, it's only about 1:55 p.m. Eastern time, but something to watch for as well. Now, just to go over the markets, guys, just to reiterate what the markets are doing here, you have the Dow up 110 points, the NASDAQ up 25, and the S&P up about 14. 1.5 across the board, approximately percentage-wise, to the upside after falling about 4 to 5% yesterday across the board. So you're having a little bit of a retrace, and we want to see now whether or not we can see follow-through going into tomorrow and to Friday. Obviously, those of you that really want the key levels and our projections need to join the Research Center to get the full analysis. We give the pivot days, turn dates, support resistance on all the markets, the oil, gold trade, the U.S. dollar, stocks like Goldman Sachs and Apple, and Research in Motion and Google. You name it, it's out there. We give it in there. You also get educational videos as well as hidden gem reports on hidden gems. That the last two, by the way, hidden gems went 50% in a matter of 2 days that we highlighted. So fantastic movers on those, and we'll be having the hidden gems report coming out very, very soon over the next week or so. Will be posted on the website again, the new hidden gems report. All right, guys. So enjoy, have a wonderful day, and check back on the website inthemoneystocks.com for any new updates, and I'll watch for these next videos over the next couple days. Take care. Have a wonderful day.